Hello, ladies and gentlemen. Good morning. Good morning from this part of the world, and depending on whichever part of the world you are tuning in from, good afternoon and good evening to you. And in fact, I'm very excited to welcome you all to yet another promising edition on the Forex Morning Mastery, our last edition for this week. My own name is Sheriff Daramola, and for the next 40, 45, 50 minutes, I will be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both fundamental and technical perspective using our basic tools such as the economic calendar, trend lines, key levels, and of course chart patterns to unravel the potential trajectory for today. Well, it has been an interesting week for us all in this community. We've done fairly well across board. It was a rosy start to the week where we did took advantage of some trading positive trading opportunities, and not until Tuesday, Wednesday, the market became a little bit choppy due to the anticipation of the major event we looked at for the week before momentum gradually came in again yesterday. Though we had a couple of losses during the midweek, but from the result from our performance from yesterday, we were able to recoup the losses we incurred on Tuesday and Wednesday, and of course, made some significant profits on top of it. Well, for those of us who are with me on both my TradingView and Telegram platform, you definitely must have gotten update as regards to how we manage our position. And of course, I did made an update this morning, and we are going to be expatiating on it today. So far this week, we have been monitoring three financial instruments, which includes the USOILSPOT, which has done tremendously well for us this week. The GBPUSD, we've done fairly well on that one too. And of course, the my favorite amongst them all, which is the XAUUSD, popularly known as the gold spot. And that one too has done pretty well since the beginning of the week. So I welcome you all once again. And for those of you who are joining me for the first time, you're highly welcome on board. And I'm very, very excited to have you around with me this morning. Well, if you do not know, I know you will be wondering what the Forex Morning Mastery is all about. What is it that we really do here 3 times in a week? Well, the Forex Morning Mastery was an idea that was born out of the necessity to do follow-up live sessions on the assets I usually share during the course of the weekend. Now, as technical traders, we usually gather here 3 times in a week, Mondays, Wednesdays, and Fridays, to do engage in follow-ups and reviews of our current positions in preparation of both the London and New York session. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually this will help you in making independent and of course independent trading decisions, enhance your decisions and strategies. So once again, I do welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we shall be diving right into the business. And as usual, the first thing we normally do on a daily basis is for us to keep tabs with the fundamental factors that is likely going to be influencing the sentiment in the market today. And based on the asset we are monitoring for this week, we have been focusing on economic features from both the United States and the United Kingdom. And due to the nature of our trading activities, we usually focus on high impactful events. However, on days when we do not have a high impactful event, we obviously look at mid-tier economic features to have a broader view into what markets are looking at to drive their trading decisions. So far this week we've had a bunch of high impactful events, and of course speeches from both the United States and the United Kingdom economy, which obviously has influenced the sentiment in the market so far. The high impactful event for this week did not come until yesterday, Thursday, May 9th, when we saw the reports for events from the United Kingdom, from the Bank of England interest rate decision, which obviously came in as expected at 5.25%. Everyone had projected that interest rate will be left unchanged. And then we also had the speech from the Bank of England's governor, where one of the major highlights from the speech he had with the press is that we may likely be seeing an interest rate cut anytime soon, maybe as early as next month, as they gradually see signals that inflationary pressure is gradually thinning out in the United Kingdom, which is obviously a good news. And this may likely cap the recent rebound in the pound sterling. We are going to be looking at this in detail and how we intend to capitalize on new trading opportunities on that particular asset. So you do not want to miss out. Try stay tuned in on that particular one. Then today, Friday, May 10th, we have a couple of high impactful events, both from these economies, the United States and the United Kingdom. And that for the United Kingdom had already happened this morning. About 3.5 hours ago, we were able to witness the gross domestic product for quarter one, and it came in very positive, higher than market expectations at 0.6% and 0.2% respectively for the quarter on quarter and year on year. And this data we saw this morning came in higher than the market expectation, and of course came in higher than the previous quarters data, which, remember, we saw the UK economy contracted by 0.3%, and this happened for 3 consecutive quarters, technically putting the United Kingdom in a recession. However, the recent development right now with what we had this morning is a positive signal for the United Kingdom economy. So we are going to be looking at how the market had reacted to this event, and let's see if the bullish momentum that we saw this morning will continue to the upside. Then later on today, in about how many hours is that? I think in about 5-6 hours from now, we shall be looking forward to the publication from the University of Michigan, which is the Consumer Sentiment Index. Now, this is another important event that everyone in the market will be looking forward to, as it gauges the prevailing sentiment and confidence levels among consumers, hereby providing us with insight into potential shifts in the United States economic conditions. So changes in consumer sentiment can influence spending patterns, impacting various sectors and markets. Now, this is usually gauged between 0 to 100, of course, and the data that came in last month, that is the month of April, came in at 77.2, and we see economists projecting a 76 for the month of May. So this is a little bit lower than the previous data, which is a sign that we may likely be seeing some contraction in those figures today. So we will look forward to see what the actual data will be. Of course, it's going to be giving us fresh impetus as we wind up trading activities for this week. Then another thing I didn't mention earlier is the fact that today, being the last trading day of the week, also comes with its own peculiarity, as market participants are expected to start rounding off their trading activities ahead of the weekend, and this usually results in profit-taking activities, after which majority of market participants who had capitalized on a particular direction during the course of the week may start taking some profit off the chart, and we may likely see some reversal setup today, which may incite movement in the opposite direction of prior leading price action. So we are going to be taking all of this into consideration while we also look at the fundamental factors behind the scenes that will be driving the sentiments today. So as usual, we are going to be moving right into the chart, where we shall be looking out for patterns and structures to guide our trading decisions for today. Now, as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT, and though the week did not start very well for us on the USOILSPOT, but so far we have done pretty well on this particular asset. And in fact, for educational purposes and for the sake of those who missed out on our earlier sessions, I would like to take a run through what really happened at the beginning of the week right here on the 1 hour time frame. Now, before I go into the details on that one, I would like to emphasize that if you in any way had missed out on our Monday session, where we did a top-down analysis on this asset, where we did identify our key levels, major chart patterns, and of course the major trends in this asset, if you missed out on this session, please, you can check the link right in the description box of this current video you are watching to have a background knowledge into what we did at the beginning of the week. So going back into structure, at the beginning of the week did not start very well for us on the USOILSPOT, as we recorded a loss, I think, during the first or second day of the week. So what we saw at the beginning of the week was price started the week on a positive note, starting around the $77.80 level, which was initially our support line for the week, and we saw price rise into the $78.35 level, where we saw the first resistance for the week. And as a result of this range bound structure, we did exercise patience, waiting for price action to either break out of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. And lo and behold, what happened was quite interesting. We saw price break out of both the resistance line and our key level at the $78.50 level, giving us a couple of buy positions at the beginning of the week. And during our live session on Monday, I did mention that for those of us who had missed out on this first buy position, that we should wait for price to come back and retest structure before we can jump into any position. And of course, we saw what happened here. Price action came back, retest the structure multiple times, and then we joined the momentum. But unfortunately, that move did not do very well, as we saw price action break down, hitting our stop loss, and of course recording our first loss for the week. Then on Tuesday, we begin to notice how it has become difficult for buyers to break out of our key level. And you know how we use the key level for the week. We wait, if price still continues to trade below the key level, it's a sign that bears are still in charge in the market, and we look out for selling opportunities. However, if the key level gets broken to the upside, then we can start considering buying this asset. Now, in addition to the fact that price action was trading below our key level, we also had a descending trend line marked out after capturing the character of price action since last week Friday, giving us a beautiful descending trend line to work with. And you know how we use our descending trend lines in this community. As long as price remains below them, we look out for structures and patterns that support the idea of selling. So right here on Wednesday, we did have the privilege of joining a bearish momentum below the support line for the week at the $77.80 level, where we saw price action drop significantly, about 100 pips thereabout. And of course, we had the privilege of joining that move. And during our live session on Wednesday, I did mention that we move our stop losses accordingly, and that we want to be seeing how the market is going to be reacting to the $77 area before deciding if we are going to be adding more sell positions to our existing trade, or probably joining the uptrend move. And remember, I did share with you all that we have a significant factor to the $77 area on the higher time frame, which has a memory for buying power. So let me show you the 4 hours time frame, which we deliberated on Wednesday. And I did emphasize here that if we look at what has been happening here since the month of February, price action, whenever price comes into that $77 area, we have always seen buyers come in to take over the market. And of course, this area shows that sellers always find it difficult to break through that particular area. So I did mention here on Wednesday that if we cite any form of reversal pattern, like a double bottom structure, head and shoulder, or a falling wedge right around this area, we definitely want to be capitalizing on an uptrend move. Now look at what we saw here during the New York session on Wednesday. Immediately I saw the setup, I shared it with us guys. Okay, let me zoom in so we can see things clearly. So right around the $77 area, I updated us. For those of us who are with me on my TradingView and Telegram platform, you must have gotten this update, as I did observe after about 5-6 hours, price action transitioned into a reversal setup in the form of a double bottom structure. And you know, whenever we identify this kind of setup, the next thing we want to be doing is to mark out the neckline of that setup, where the breakout of the neckline will be all we need to continue that uptrend move. And this was exactly what we did. And remember, we also had multiple levels to maximize the bullish momentum. So we had levels like the $77.80 area, and of course we had the key level at the $78.50 area, and of course the $79 area, all of which we were able to successfully add more buy position. Though the first 3 did very well, while the third one went into break even, giving us roughly about 250-300 pips for that one. And of course, I was very excited that we were able to recover the loss we made on Tuesday, and so of course made some more profit on top of it. Now, during the later part of yesterday, I did mention that we will be looking out, after being taken out of all the buy position, I did mention that we will look out for two structures here. That since price action has broken out of that descending trend line, technically and from a theoretical perspective, we do expect that price action at some point may come back to retest the structure that was broken in an attempt to continue the uptrend move. Now, I said we will look out for any form of reversal setup around that trend line to join an uptrend move. But while monitoring the structure, I noticed during the about 3-4 hours into the New York session yesterday that sellers were finding it difficult to break through our key level at the $78.50 level. And considering the fact that price action is trading above our key level, of course you know how we use our key levels in this community. When price remains above them and we continue to see patterns like buying pressure above the key level, we have a good sign that buyers may take over the market. So as a result of this, I said we should be joining the uptrend at the breakout of the $79 area. And of course we saw price moved about 50-55 pips thereabouts in our favor. And this morning I told us all to move all stop losses. Let's secure the current buy position, as anything could happen today. And if you had done that appropriately, you must have been taken out of the buy position with a minimum of about, let's say, 30-25 pips, depending on where you moved your stop losses to. Now, congratulations to everyone who has been part of this profitable journey. Now, as we move on today, what is going to be our plans as we get prepared for both the London and New York session today? Well, before we go into the technical details, it's very important for us to understand the factors behind the scenes which is driving the behavioral pattern of market participants in this market condition. Now, During the midweek, we begin to see some traction in favor of the US oil after the first half of the week was more of a bearish momentum due to the easing geopolitical tensions in the Middle East. As at the beginning of this week, we were looking at some agreement between Israel and Gaza and Hamas, where Hamas was accepting the conditions, but later on Tuesday, Wednesday, we saw Israel rejected it, and this further incited some escalations there. Then they opened another war front in Rafah, which was against the international community, of course, and this has further escalated concerns about oil disruption from this particular area. And as a result of this, due to these concerns, we begin to see price gather some momentum, and this led into the bullish opportunity we capitalized on during the second half of the week. Then there are other various factors behind the scenes which has been influencing the crude oil prices positively. We talked about the EIA report on Wednesday, where they reported a 1.5 million barrels drop in crude oil stockpile, which was against the market expectations of 7.3 million. So, and we know when there is a decline in crude oil stockpile, it simply shows that supply is not strong enough to meet the demand on board. So what this simply means is that demand is very, very high, and our simple economics tells us that when there is high demand, chances for price to rise increases, and this obviously further escalated price of oil to the upside. Then besides this one, we also got report from China yesterday, where official data came in and revealed that China had a 5.45% year-on-year rise in crude oil import for the month of April, signaling a positive uptick in demand. And similarly, the same thing also happened in the United States. So the two major importers, user of oil in the world, are actually witnessing strong demand of this commodity, and this is a positive signal for the US oil spot. And for me, the path of less resistance for US oil prices is still looking very bullish at this point in time. However, the prevailing strength in the US dollar, backed by the hawkish stance from Federal Reserve officials in the last couple of days, may limit the uptrend scenario on this asset. But I still think that due to the data that came in from the United States in recent times, things are not still. I think inflation may gradually be thinning out also in the United States, and everyone will be looking forward to the CPI data coming in from the US next week for further insight into this. But pending that will happen, I still think the path of least resistance for US oil is looking bullish. Now the question now is, what is going to be the path that the uptrend scenario is going to take? Is it going to continue to the upside, or are we going to be seeing some profit-taking activities, first of all, where price may retrace back into the descending trend line that was broken on Wednesday to inside the uptrend move? Or are we going to be seeing the $79 area serve between the $79 area and the $78.50 area serve as a platform for new buying opportunities? So today our center of focus is going to be between the $78.50 level and the $79 area, where depending on how price action reacts to the structure will determine if we are going to be going bullish or bearish today, if you are a counter trend trader or a short-term trader. So at this juncture, I do have a buy stop order above the $80 mark, where a breakout of that structure should be welcoming more buying opportunities for me. But at this point, let's see how the market will react to the $79 area. Now, if I can see any form of reversal pattern here on the 15 minutes or 10 minutes time frame, like a double bottom structure, where I will mark out the neckline and then buy the breakout retest of the neckline to join the uptrend move. However, if price drops below the $79 area and continuous selling pressure persists below the structure, we could see a short-term selling opportunity all the way into that descending trend line I did talked about. And if we look at the distance between there and the trend line, that's about 120 pips. But personally, I wouldn't be taking that trade. But if you are a scalper, a short-term trader, or a counter trend trader, you feel comfortable in this kind of position, you may as well want to capitalize on that opportunity, as it may give us a minimum of 100 to 120 pips within that range. Now for me, what I will be doing is to wait. If price drops significantly, what I will be doing here is to wait and see how the market is going to be reacting to that descending trend. And like I said earlier, I want to see a possible retest of the structure, where any form of reversal pattern here will give me a beautiful confirmation to continue the uptrend move. So this is what I will be looking forward to if price action ever breaks down the $79 area. But if price maintain itself above the 79, then I will be looking out for patterns like double bottom structures, head and shoulder patterns, falling wedge to join the uptrend continuation. So this is my simple view on the US All Spot. Currently, we do not have any positions running right now. So let's exercise patience and wait to see how the market is going to be reacting to that psychological level at the $79 area. And trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the US All Spot for today. Let's see if the market will continue the uptrend, or due to the fact that today is the last trading day, are we going to be seeing some profit-taking activities which could bring price back into that descending trend line today. I will be giving you updates as at when due. So if you have any questions or you need some further clarifications, feel free to let me know in the comment section. And if you have found this content helpful and useful in making your independent trading decisions on the US All Spot, please do not forget to give the video a thumbs up. Your likes are valuable to me, and of course it also helps the algorithm push the video to a wider audience of traders who may find this content beneficial, which will dovetail to the growth of this community. And thank you very much for your support. So let's see if there are any questions, and you can as well use that time to mark out these levels accordingly on your charts. Stay tuned in, guys. All right. So I see you, Soldier Pete. Good morning to you. Glad to have you around. Happy Friday. Veg food lover. I'm not sure I understand what you mean in the comment section. You might want to rephrase that so we can all be on the same page. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next financial assets on our watch list. So the next asset we are going to be looking at this morning is going to be the GBPUSD, that is the pound sterling against the US dollar. And finally, yesterday we were able to capitalize on some bullish opportunity, and it appears we have in a similar structure with that which we saw on the USOILSPOT. So let's run through what really happened at the beginning of the week, and of course let's see how the week has gone by for us all. Well, at the beginning of the week we were running a buy bullish expectations as we capitalized on the breakout of the resistant line at the 1.25575 a couple of times. The first one gave us some minimum modest size of profit, I think about 10 pips thereabout, while the second one did not do very well as we got stopped out in a loss on the second one, giving us our first loss for the week on the GBP USD. Now, this is how it all happened. Now, at the beginning of the week, after considering the fact that price action was trading above our key level and the descending trend line we identified on the 4 hours time frame. For those of you who missed out on our top-down analysis on Monday's session, you may want to check the link right in the description box below to have a deeper understanding into what we are talking about here. So we saw price action break out of both the descending trend line, retested it right there on Friday, and of course the momentum still maintains itself above the key level at the 1.25250. Now, following, in addition to these two structures, we were able to observe a consolidation phase during the first 12 hours of the week as we saw price action confined within the 1.25575, which happens to be our first resistant line for the week, and of course our support line for the week was at the 1.25380 area, giving us a range bound structure to work with. And you know how we use our range bound structure whenever we identify them. First of all, it tells us how uncertain market participants are as regards to the market dynamics, and this resulted into the structure. So we usually exercise patience and wait for price action to either break down the support line to give us an opportunity to sell, or the breakout of the resistant line to give us an opportunity to buy. So with this understanding in mind, we had our first buy position triggered at the breakout of the resistant line, and of course we saw price action come back to retest structure, which we took advantage of, but unfortunately that position did not do very well at all as price action dropped significantly to the downside. Then we had price break down our support line for the first time. After the stop loss was hit, we saw price retested it around this area, and it was at this point we joined our first sell position for the week during the later part of the New York session on Tuesday. Then remember, we also added more positions at the breakdown of the key level at the 1.25250 area, giving us about 2 sell positions in that regard, where the first sell position throughout Tuesday's session ran to about 70 pips, while the second sell position moved with about 55 to 60 pips thereabout, giving us over 120 pips on Tuesday's trading session. And remember, I did updated us on both my TradingView and Telegram platform that we will be moving our stop losses to secure some position, and I do hope you did. If you did that, you must have been taken out of that position with a reasonable amount of profit, and well done to you guys. Now, during our live session on Wednesday, I did emphasize here that that area around the 1.24725 area is a critical juncture in this market that we will be waiting patiently to see how the market will be reacting to the structure. And one of the reasons why we placed our center of focus in this particular area was due to what we saw on the higher time frame. Now let me quickly show you what we saw on the 4 hours time frame. Now, after considering the character of price action in the last 2 to 3 weeks, we were able to observe that the area between the 1.24750 and the 1.24500 area had been a crucial area where we see sellers find it difficult to continue their momentum to the downside. And as a result of this, we identified this zone as a temporary demand zone, at least for the meantime, where if price remains above the structure, we definitely want to be looking out for patterns and structures that supports the idea of buying. And we saw what happened during the course of the week. As soon as price got into the structure, as you will see here, we begin to notice buy pressure resume around that area, and this continued into yesterday's trading session as we saw another buy pressure resume around this area. Now remember, I did mention here on Wednesday that the only condition that will make us sell at this juncture is for a breakdown retest of structure, which obviously never happened, and of course negated the idea of even considering selling this particular asset. So with a bullish idea around this area, it becomes much more easier for us to make a decision on this asset. And what I did say here yesterday is that we will be looking at the breakout of that psychological level at a 1.2500 area to join an uptrend move. And one interesting thing about this level is the fact that it also shares a beautiful confluence with that descending trend line, which has been capturing the series of lower highs since last week Friday. So in the last 1 week, we have seen our price action had consistently and uniformly found lower highs, giving us this beautiful descending trend line. And with a beautiful confluence with that level at the 1.25 area, it was a sweet spot for us to capitalize on bullish opportunities. And of course, if you had missed out on that opportunity, the market was kind enough, it came back, retest the structure, and since that moment we have been in a buy position. And in fact, we have 2 buy positions running at this point in time. Remember, we also added one more level at the 1.25250 to add more buy position. And in fact, we still have a couple of more levels like the 1.25575 area and the 1.26100 area to maximize the potential of this bullish move if price action ever gets into those structures. So at this point in time, we have a minimum of 2 buy positions running in profit right now. And for those of us who capitalize on this opportunity, well done and kudos to you. Now, since price action had moved significantly in our favor, and considering today being the last trading day of the week where market participants are expected to wind down their trading activities ahead of the weekend, it is crucial for us to move all stop losses and secure this current buy position. At least we want a situation where both positions will not close in a loss. So I still think that anywhere below that key level at 1.25250, while we also give enough breathing space for price action to move around, seems most appropriate to lock in this position. So moving our stop losses around this area seems quite reasonable to manage any sudden pullback around this area. Now, with a well secured position, what is going to be our plans as we prepare for today's trading session? Well, it's at this point, it's very crucial that we also have a glimpse into the market drivers that will be influencing the sentiment in the market today. Now, I would like to share with you, I have, hold on a second. So I have a couple of market drivers here today, which I think will be influencing the sentiment in the market this week. Now, one of the drivers we are looking at today is the Bank of England's monetary policy outlook. And from what we have here, the chief economist Peel indicated that potential rate cuts over the next few meetings. There is a possibility of a potential interest rate cut in the next few meetings, and this will be subject to major disturbances in the economy. And he also went on to further emphasize that the Bank of England governor yesterday further went on to emphasize that we may likely be seeing interest rate cut as early as next month due to the fact that inflation is gradually thinning out, which may cap the upside potential of pound sterling. Then another factor here that will be influencing the pound sterling is the US dollar weakness. Now, the pound sterling saw a notable recovery following the Bank of England's monetary policy decision as the US dollar weakened in response to the disappointing jobless claim figures. Yesterday, the United States recorded a high jobless claim count, which came in higher than the market expectations, and obviously has affected the US Treasury bond yield, which of course has rubbed off on the US dollar. And at this point, the US dollar is still struggling to gather some momentum. So this may likely influence an ascent in pound sterling. Then another fact here is the inflationary forecast for the Bank of England, which we saw yesterday. The Bank of England has lowered its inflation forecast, projecting a decline to 1.9% in quarter 2 of 2025 and 1.6% in the similar quarter of 2026. Now, for me, this is a positive signal. It shows that the monetary policy, the tightening of the monetary policy has been effective so far, and for them to focus a lower inflationary pressure, it shows that there are signs that inflation is thinning out. So it's a very good signal, and it may cap the upside potential of the pound sterling. Now, another factor is the GDP data, which we saw this morning coming in higher than expected at 0.6%, as against the market expectation at 0.4%, which is a very good signal, considering the fact that the previous quarters has been recorded significant contraction in the United Kingdom economy. And remember that they were technically in recession during last financial year. They are technically in recession. But with this development this morning, it shows that there is a gradual improvement, and with a 0.6%, let's see how the market is reacting to this new development as it is. Now, with this information we have gathered here behind the scenes, which may influence the sentiment in the market, let's see how the market participant has weighed in and digested this event, and of course this will reflect on the chart as price action. Now, going back into the chart here, looking at the structure we have on the 1 hour time frame, we indeed have a simple trading setup to guide our decisions today. Now, the first thing you will observe here is that in the last 1 week in this market, the price has been bearish, finding series of lower highs, giving us a descending trend line to work with. And from a theoretical perspective, whenever price action breaks out of a trend line like this, we expect that some point in time price may come back to retest the structure in an attempt to continue the uptrend move. So the question now is, how are we going to see selling pressure that will push price into the descending trend line before an uptrend continuation happens? Or how are we going to see the emergence of an uptrend continuation pattern around or above our week's key level at the 1.25250 to continue the uptrend move? So The 1.25250 level, which is our weekly key level, is going to be playing a significant role today, as depending on how market participant reacts to the structure will determine if we are going to be adding to our buy position or probably getting ready for selling opportunity. Now, looking at the structure here, if price action breaks down our key level at the 1.252 and continued selling pressure happens here, I will not consider selling yet, due to the fact that we are still within, we are still above that descending trend line. So instead, I will be waiting to see how far will this bearish momentum go. Will it go to as far as this descending trend line right here? And in fact, we also have another trend line which we identified on the 4 hours time frame, which is right here. So it depends where price will come to. So within that area around the 1.249 and the 1.246 area will be where I will be looking out for reversal setup, just right around here between the 1.249. You want to be writing that down just in case price action comes into that area, or you can set an alarm so that you can get informed when price comes into the structures. So between the 1.249 and the 1.246, I want to wait and see any form of reversal patterns around this area. It will come in the form of a double bottom structure, inverse head and shoulder pattern, or even a falling wedge. Once we have any of this pattern mature, that is breakout retest of our neckline, then we will be continuing the uptrend move. So that is what I will be looking out for if price action ever breaks down the key level at the 1.25250 level. Now, if price does not break down the key level and it continues to find higher highs and higher lows, remember we have multiple levels that we are going to be using to maximize this bullish move. We have levels at the 1.25575 area where we will be adding more buy position, and of course we also have another one at the 1.26100 area to maximize the potential of this bullish move. So this is my simple view on the GBPUSD today. So let's see how the market will play out around this area. And like I said earlier, our center of focus today is going to be around the key level at the 1.25250 area, where depending on what happens here will determine what our next line of action will be. And trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give us updates as at when due. If you have any questions whatsoever at this juncture, feel free to let me know in the comment section. As always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move right into the final asset on our watch list for today. And if you have found this content helpful, let's give the video a thumbs up. Your likes are very valuable to me, and of course it also helps the help. It's one way, and it's the cheapest way you can actually help the community to grow. We have over 7 people on board. Please let's give the video likes, and let's allow the likes to tally with the number of people on board. And thank you very much as you do so. So see you in the next 10-15 seconds. All right. So in the absence of no questions, let's assume that we are all on the same page here, and that all I've said so far has been quite explanatory. And I do hope you move your stop losses accordingly, like I said earlier, and of course you marked out those levels accordingly. Remember, they are going to be serving as a yardstick to guide our trading decisions for today. So with that being said, let's move on to the final asset on our watch list for today. Stay tuned in. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. I usually leave the best for the last, and this is here we had today. So on the XAUUSD, we have done tremendously well for this week, as we have been buying this asset since the beginning of the week. And of course, if we look at the higher time frame, that is the 4 hours time frame, especially for those of you who are familiar with my weekend video on this asset, you will see how we capitalized on this opportunity. So this was the structure we were looking at the beginning of the week that will be guiding our decisions here. Now, there are two things, in fact there are three things here on this chart which guided our decisions for the week. The first one here is the fact that since price action tested that all-time high during the mid-month of April, that's around the $2,430 area, we saw selling pressure resume in this market, leading to a series of lower highs, resulting in profit-taking activity, I think, and then we had this descending trend line as a result of the series of lower highs here. Now, despite the fact that we had a descending trend line which portrays the characters of sellers in this market, one thing that holds very clear on the structure is the inability of sellers to break through that area between the 2,300 and our key level at the $2,285 area. Now for us, this is a very beautiful signal that sellers are not strong in this market, that the inability of sellers to break through this area for us is a sign that market participants are finding the gold very, very cheap to buy around this area. In fact, if you look at what has been happening around that area since the beginning of the month of April, you will see that every attempt by the sellers to break through the structure has been met with strong resistance from the buyers, and this continued into last week's trading session. And one thing we said at the beginning of the week is that if price action ever breaks out of that descending trend line, we are going to be going strongly bullish to the upside, and this is exactly what is happening in this market at this point in time. Now, after identifying the structure at the beginning of the week, we decided to run through the lower time frame to see how the market is reacting at the beginning of the week. And in fact, we were able to identify a simple trading setup after considering the character of price action for the first 6, 7, 8 hours of the week. As you will see, we had a range-bound structure where price action was confined within the 2,303 and the $2,292 area, giving us an insight into the prevailing uncertainty in the market at that particular point in time. And you know how we treat our range-bound structure. We exercise patience, waiting for price action to either break down the support line to give us a selling opportunity, which obviously never happened at all, and the price breaking out the resistance line to give us an opportunity to buy. Now look at what happened. We had the privilege of joining the uptrend move, and in fact we were able to add a couple of more buy positions to the previous entry, as we had a 2,310 level broken to the upside. We also had another one had the breakout of the 2,320 area, and of course we saw selling pressure come in during the Tuesday's trading session, and I did mention that we move all stop losses, secure the current buy position, and doing that appropriately, we were taking out of all the buy position, I think with a minimum of 150 to 200 pips thereabout. So through the first half of the week, it was a profitable start for us. Now on Wednesday, during our live session, we begin to notice that price action has been going through a choppy market condition. And one of the things we talked about here on Wednesday was that, remember that we saw price action break down that descending trend line we spotted on the 4 hours time frame, and from a theoretical standpoint, we expect that price may likely come back, retest the structure in an attempt to join an uptrend move, or a reversal pattern around this area to incite an uptrend continuation. Now, for about 2 days, we were not able to take any trade on this asset as we were waiting for price to drop into that descending trend line, which never happened. And as a result of this, during my commentary session yesterday morning, I updated this chart with a new trend line that I said will be guiding our trading decisions for yesterday. Now, after capturing the series of lower highs in the last 60 to 90 hours in the market, we were able to identify a new descending trend line, where I did mention that a breakout retest of the trend line will be a good signal that buyers are going to be gaining some momentum. Now, with the situation here, I joined the breakout retest of the trend line, and then we had multiple levels like the 2,320 and of course the $2,330 area to maximize this bullish move. And currently, as it is right now, we are running with about close to 900 pips in profit right now. And for those of us who did capitalize on all of these opportunities, well done and kudos to you. So at this point in time, since price action has moved significantly in our favor, it is high time that I was trying to set my stop loss on my XAUUSD trade personally, so that is why I was looking at the other screen. So as it is right now, price action has moved significantly in our favor, so it is high time that we move all stop losses to secure this current position we have here, considering the fact that today is the last trading day and we may likely see some volatility or profit-taking activity that could bring price to the downside. So at this juncture, I would encourage us all to move all our stop losses. And where do we think it's most appropriate to move all stop losses to? Well, for me at this point in time, considering this current structure here, let me zoom in. You will see that we have a consolidation phase around that $2,370 area before this new bullish momentum comes in. So I think that anywhere around the 2,365 level and the $2,359 area seems most appropriate to move our stop losses to. And always remember that we usually give enough breathing space for price action to move around due to volatility that may come in at any point in time. So kindly move your stop losses accordingly, secure your position at this point, and let's see how far this momentum is going to go. Now, so far the momentum has been very bullish since the beginning of the month, and it's very important that we also look into what are the driving factor that has been influencing the sentiment in the market in favor of the gold spot. Now, one of the major factors here that has fueled the strength of the gold is the fact that the US dollar is currently weak due to the employment data we saw last week Friday. The NFP came in below expectation. The average hourly earnings came in below expectation, and of course during the course of this week we also saw the which data is that? Okay, the jobless claim count, which came in higher than expected, showing that the unemployment in the United States is increasing. Well, this is a very good signal for the Federal Reserve. Of course, they've been tightening their monetary policy to ensure that the labor sector contracts a little bit, and this will obviously curtail the inflationary pressure in the United States. And of course, this latest development has resulted in new speculation that the economy is sluggish and may prompt the Fed to consider interest rate cuts anytime soon. So a lot of people have been dumping the US dollar at this particular point in time due to this sentiment in the market. Then another major factor that is influencing the gold asset is the renewed geopolitical tensions in the Middle East. Remember, there was at the beginning of the week, of course, the beginning of the week we saw Hamas accepting the negotiation, the conditions in the negotiation, only for the Israeli government to reject it on Tuesday/Wednesday, which further incited concerns about the escalation of the geopolitical tensions in that zone. Then on Tuesday, Wednesday, we saw the Israeli opening another war front at Rafah, which has further escalated tensions in that particular area, and is going to obviously favor appeal for safe haven assets such as the gold. Now, in light of this development and considering the weaker US dollar at this particular point in time, the path of least resistance for gold is still looking very bullish for me. Now, in fact, I have some market drivers which I would just like you to run through with your eyes so you can have an insight into what may likely be influencing the market today. Now, we have lower US Treasury bond yields. I hope you can see my screen. We have the lower US Treasury bond yields, and of course we do know how the value of the Treasury bond yield is directly proportional to the value of the US dollar. So if the US Treasury bond yield is not doing very well, the dollar is expected to drop, and if the US Treasury bond yield is doing very well, the dollar is expected to rise. Now, if you look at the 10-year benchmark US Treasury bond yield, it is dropping throughout the course of the week, and this has rubbed off on the US dollar as well. Then in addition to that is the softer US labor market data. I just mentioned earlier the labor sector is not doing very well, contracting at this point in time, which is a good signal for the Federal Reserve, but not a good signal for the US dollar, as it will be inciting the speculation of potential interest rate cuts anytime soon. Then another factor here is the geopolitical tension in the Middle East, which I did talk about earlier. And then the final one here, which is what I've been talking about month in, month out, and that is the central bank's gold purchase. And we've learned how the People's Bank of China have continued to increase their gold reserve, and for the 18th consecutive month, last month we learned that they increased their gold reserve by 60,000 troy ounces of gold, even amidst these higher prices. Now, for me, this demand for gold across majority of the Euro-Asian country will continue to influence price of gold to rise to the upside. So personally, for me, I still think the path of least resistance for gold is looking very bullish. So let's see how far this momentum is going to go. For multiple levels at this point, I'm yet to have any level. Let's look at the 4 hours time frame together right here and see if we have multiple levels that we can use to maximize the next move around this area. So if we look at the structure here, I think we have somewhere around the 2,390 area, which looks promising to add more buy position, but I would like to see price breakout retest of that structure before I jump into any position. Remember, that area is known to be a strong selling niche ever since price action tested that all-time high. So I would like to see price breakout, retest of that structure before I can start considering buying this asset, and this obviously will happen on a lower time frame like the 5, 10, 15 minutes time frame thereabout. Let's see if price breakout retest the structure, then we could add more buy position to our existing trade. So this is my simple view on the XAUUSD. Now let's talk about the potentials the sellers have around this area. Well, the only condition that will make me want to sell the asset today is for me to see any form of reversal pattern around this peak where price action is at this point. So if I see, let's say for the case scenario, let's say we see a double top structure around this area, a breakdown retest of the neckline could incite a sell-off back into this descending trend line that was broken yesterday. Of course, we expect that price will come there to retest it at some point in time, which will be dovetailing to a minimum of 600 pips to a maximum of about 750 to 800 pips thereabout, which is not very considerable if you look at that. So let's see if the price will form any form of reversal pattern there. Well, that will be considered to be the beginning of profit taking activities as market participants round off their trading activities ahead of the weekend. But if that does not happen, we will continue to look out for more opportunities to maximize this uptrend move. So this is my simple view on the XAUUSD for today. Please, if you still have your buy positions running, please ensure you move your stop losses. We talked about the areas where we move our stop losses to. Please do so, because we may see some volatility happen prior to the release of the consumer sentiment index coming up in about 4 hours from now. So this is my simple view on the XAUUSD. I hope you found it very useful. If you did, please give the video a thumbs up. Your likes are very, very valuable to me, and of course it's one of the cheapest way you can help this community to grow. So as usual, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we start rounding off on today's Forex Morning Mastery session. See you on the other side. So I see your comment here, Sakebalata. I hope I pronounced that correctly. Thank you very much. I really appreciate it. I hope you have supported the channel by clicking on that thumbs up. Thank you very much as you do so. All right, and you also remain blessed too as well. All right. So in the absence of no questions, I'm of the opinion that we are all on the same page, and it's on this note we have come to the end of today's Forex Morning Mastery session, the last edition for the week. And in fact, I really enjoyed every single moment with you guys, and I love the energy in the house. And for those who click on the like button, you guys are wonderful. Thank you very much as you do so. And for those who are yet to click on the like button, it means a lot to me. Please, it doesn't cost you anything to click that like button, and let's allow the number of likes tally with the number of people on board. And thank you very much as you do so. So it has been a wonderful week for us all. We started the week very, very good. During the midweek, we had a couple of losses, and during the second half of the week, we were able to recoup the losses and made some significant amount of profit on top of it. For those of you who are part of this profitable journey and who had also stayed faithful with our analytical approach, well done and kudos to you. So today we were able to run through all the financial instruments on our watch list, taking them one by one, and of course using our basic tools such as the trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. We took on the USOILSPOT, we took on the GBPUSD, and finally the XAUUSD, where we were able to identify simple trading setups to guide our decisions for today. And I do hope you marked out these levels accordingly on your chart. If you had done so, well done and kudos to you. So all we need to do right now is exercise patience and wait for the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place. For those of you who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here in this community. And if you have done so, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually will help you in making your own independent trading decisions. So I look forward to seeing more of you same time on Monday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we look forward to starting the new week on a positive note. And if you are yet to subscribe to the channel, please do right away, as I will be dropping my ideas for next week during the course of the weekend on 3 assets that we will be looking at. So by clicking on the subscribe button, clicking on the notify me button, you will get notified as soon as I drop this content. So it's on this note, I do want to wish us all the best of luck today, and I wish you a wonderful weekend. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.